Nigeria, for the second time in 4 years, fell into another recession, one which is considered its worst economic growth contraction in 4 decades. In a country with over 41 million small and medium enterprises, Nigeria is considered advantaged where these sectors can help drive its growth and hasten its exit from recession. The significance of this sector is evident in its contribution to the country's GDP, which is about 48%. Their roles in terms of production, employment generation, contribution to exports, and facilitating equitable distribution of income is very critical. Microfinance banks, on the other hand, have also shown its significance to Nigeria's economic growth, providing services such as credit and capacity building, amongst other products, to small and medium-scale enterprises. Microfinance concepts are being utilized by government through the provision of low-capacity financial services to combat rising poverty rates. With the significance of these two sectors in a developing economy like Nigeria, let's examine its impact on economic development while the country battles another recession amidst a pandemic. I have joining me the Chief Executive Officer of Main Street Microfinance Bank Limited, Mr. Adegoke Adegbami. Thank you very much, Mr. Adegbami, for your time.
Thank you, Tolulope.
I appreciate your time on the show.
Thank you very much.
Yes, Microfinance Bank, one way or the other, it shows that MFAB are ascribed to poverty alleviation strategy, or, what the government wants to achieve. It should be, that should be the goal. But with what has been happening, tell us, how well a microfinance bank fared in the country with all of the challenges? We're not going straight to the challenges now, but how well have you fared in the practice of actualizing this goal of reducing poverty in the land?
Well, thank you very much. I can, as an insider, and as somebody who is a part of the economy in Nigeria, I can categorically say that we have fared well. We have done very well in alleviating poverty and in providing means of livelihood for people that wouldn't have had one. Today, as at last year, the CBN statistics shows that we have about 500 billion loans disbursed by us. Of course, we are many and we have different categories. But beyond how much we have disbursed or that we have in portfolio balance, you also have to know that how do we fund what we give out to the public? The public, yeah. Unlike what happens in the commercial bank, where it's just a portion of what they collect from the society, they give back in terms of loan. In our own case, we use largely the shareholders' money and the money we borrow from other entities to be able to serve the kind of people we are serving. And also, the fact that in what we do, we are able to reach the remote parts of the country where naturally they wouldn't have access. You can look back, you can see that we have fared well. Now, over the years, a few microfinance banks dropped along the line. Yes,
we've always heard of, even lately there was one last year.
Yes, there was the revocation of 42 licenses. But if you look at the rate of survival in businesses generally in Nigeria, you would discover that as microfinance banks, we have survived very well. Because today, we still have well over 800 microfinance banks across the federation. And a whole lot of us are doing very, very well. A whole lot of us, we are growing the size of our assets, and we are reaching out to many people. So when you look at it like that, you can see that we have fared well, we have done well as a subsector. And we believe that we can still do more, but with what we have done, given the circumstances we have found ourselves, the microfinance subsector has done very well.
Well, we have 70% of Nigeria's population engaged in the informal sector and also agricultural production and all of this. Many are still saying that the MFBs, that the microfinance banks, are yet to really tap into this market.
Now, if you want to know the impact we have made,
Okay.
you have to imagine if the microfinance banks are not there.
At all.
At all. Now, I think the only side that we need to address, and that is the reason why it appears that, okay, we have not covered enough ground. Usually, everywhere in the world, the microfinance subsector is always supported by the government. So the right thing is that if you can prove that you have the capacity to handle these things, the government will support you, because the type of people we are serving, they are the type of people that if they are not served, the society will have problem. Because these are the people that the regular financial system will not attend to. And these are the people that will contribute to criminality around us. So if we are not there, the government will have problem. The private will have problems. So I think we need to scale. That is the only challenge. And to scale, we need the support of everybody. I have advocated that we should have a situation whereby this central bank is driving the commercial banks to disburse minimum of 65% of the deposit they collect from the society to disburse it back in loan. There should be a percentage of that 65% going to microfinance banks. The government doesn't have to choose the microfinance banks they will give to. Let them select the people they can work with. Let them set up their own risk acceptance criteria. But let a very small portion go to the microfinance banks, because the people we are serving, no matter how much the commercial banks pretend, they cannot serve them because they are not cut out to do that. Their models cannot accommodate them. But these are the people that are very, very critical to the society. Like you are talking of SMEs, where we have more than 41 million in Nigeria. Now, if the government is trying to create jobs, just do something that will make each of these 41 million engage one additional person. The unemployment problem is solved. So if we can find a way to empower the people that are driving this thing, you will discover that we will actually reach the goal faster than we plan. So I think all hands must be on deck. The society must support us. The government must support us. And for us who are practitioners, we are improving by the day. We are learning more. Where we are today is not where we used to be.
True.
The capacity has increased, very greatly. And I have been outside this country where we met people from other countries, microfinance fora, and you will see that Nigerians stand out. I've been in Europe, part of Africa and America. Nigerians stand out. So if we are supported, we can do more. I think that is where the challenge lies.
I'm also worried about security of funds. You give out funds, and how has it been? How receptive are the people? Are they going? Are they getting these monies? Are they returning it back to you? How's the business been? You know, you deal with those traditionally not served by the commercial banks, like we said. So how has it been? Because it's important that you get your funds back so that someone else can get.
Now, first of all, we have to acknowledge the fact that we are in the same society like everybody. And the culture, the credit culture in Nigeria is poor. It's poor because we don't have enough credit. It's also poor because the attitude of people when they collect credit, their attitude is that when you get the money, whether you are paid or not, it doesn't matter. So to that extent, there is a challenge that you have a few people collect money and they don't bring it back. And we are not the only ones that are exposed to that challenge. But if you also look at the people we serve, we see them as risky group.
Yeah.
But really, the low-income earners, their capacity to owe and not pay is not as high as the rich guys. It's the rich guys that from the time they are coming to collect money, they are prepared not to pay. And they put everything on ground to make sure that by the time you end up in court, you will stay there for long. So if you look at it from that perspective, the rate of payment is actually encouraging. Of course, we have a few who bring that same tendency into the microfinance sector. Now, the challenge is that when you have a few people that bring that tendency into the microfinance, and you have a microfinance institution that is small in size, just a few customers, a few bad customers can run the microfinance banks down. No. So that is the challenge. But generally, and it's not only here, all around the world, the attitude of the low-income earners, I don't want to call them poor people, their attitude is actually better than the rich, organized guys. Because these people don't have money to hire a lawyer to go to court. So, and if they pledge something, when you want to bounce on that thing, they want to see what they can do. And there's also a solidarity arrangement that when you have them in a group, this woman doesn't want a situation whereby other women like her, they will now see that she's owing, she's not paying. So that makes them to be more committed than the average guy educated on the street. He knows all the loopholes in the law that he can exploit.
True.
So to that extent, it's not too bad.
True, true. Now, you talked about support from government, which is key. I think almost all sectors need support. Even the media needs support from the government. What about issues around undercapitalization, inefficient management, regulatory and supervisory loopholes? How has that affected business?
Okay, let me start from the management capacity. Like I said, there have been microfinance all around the world, microfinance practices, including Nigeria. Our forefathers did microfinance. When I was in the village, my grandmother belonged to some groups where they contribute money, and during the farming season, you will carry it, you will use to. That is one form of microfinance. But in Nigeria, we got to the organized microfinance practice in 2005. Between 2005 and now, that is about going to 16 years now. Now, we can say we are 15 years old in this arrangement. Now, as at that time we started, the capacity in the industry, I mean, the people that we manage, you don't have a lot of them. You only have people who are coming from the commercial bank, maybe people who, by virtue of the consolidation, they couldn't remain in the commercial bank. They are out now. What can they do? There is this belief that microfinance is the small size of commercial bank. So they find themselves there. And they operate with this understanding that, okay, everything we do in the other side, we just do the small size of it. But they forgot that the audience you are serving, the market you are serving, they are the real determinants of what you do and what you don't do. Yes. And the market you are serving in the microfinance sector is different from the one you are serving in the other side. So we have a lot of issues and people wanting to do microfinance like commercial banks. So that actually affected a lot of us as practitioners. Along the line, the CBN came up that, okay, everybody in the management in the microfinance sector must be certified. They worked in collaboration with CIBN, and they have some foreign people that came to train the trainers. And if you take it from that point, since 2010, there have been a tremendous improvement. Today, we have people who actually know how microfinance should be done. And then you see that today we have microfinance institutions in Nigeria attracting foreign investment like any other sector, in fact, more than a few other sectors. So that is to say that the capacity has improved a lot. And then even in terms of the quality of the portfolio, to some of us, the quality of our portfolio actually competes with commercial banks. Don't forget that before a commercial bank will give you money, they will collect your property. Not just any property. they must be able to take legal mortgage, because you can own property, but you don't have legal title.
Yeah.
So they take the ones that have legal title. They protect themselves.
You have the CFOs, you have all of the documentations and all of that. That's true. That's really true.
So to that extent, we have improved. Now on the regulation side, the regulator also, because we are all learning. You know, it was more of trial and error at the beginning, because before CBN launched the policy, they sent team to different places. But you see, one thing with microfinance is that the practice of microfinance is highly localized. You must factor in the environment. So no matter what you copy from India, what you copy from Bangladesh, from wherever, it is the reality in your environment that matters. Now, over the years, as the operators are learning, the regulators are also learning. And you remember that the regulatory policy we are using now it started in 2005. It was reviewed in 2012. Now, it's also being reviewed now. In fact, the new one was supposed to be released before the coronavirus came on board, and I believe it's going to be released any moment from now. The CBN also released a Code of Corporate Governance. We didn't have that before. For Code of Corporate Governance, we normally refer to the CAMA. Okay. But today, they have the ones that are for horse. Okay. So those are improvements that have come over the years. But I also believe that the regulators can also do more. Anything that is going to help the practitioners to have access to fund. You know, what we do, our stock in trade is cash. So if you can confirm that this person or these institutions have the capacity, let's use the government's instruments to support them. Sometimes it's just guaranteed that you will provide for them, not money. But through the guarantee, they will be able to get stable and cheap fund. And when we do that, we'll be able to also lend to the society. And of course, I must say that it's not only lending we do. There are other things that we do.
That's my next question. I want to tell us a little about your services. You know, as time is not always our friend on television. It's always, I know you do credit, money transfer, micro leasing. Tell us more about what you do.
Of course, the truth is that it's a very broad area, and each of us as practitioners or institutions, you have to take where you want to focus on. Okay. Now, but broadly, we do, loan that everybody knows that's what we do. But we also take deposit from the society. I've also mentioned that the deposit we take is always very small compared to what we give back to the society. Now, we take deposit. The issue of taking deposit is also very, very important, because if people cannot save, they can't get out of poverty trap. So that is a very critical service that we provide there. We also do micro insurance. There are people who naturally, they won't have their businesses insured in any way. But because of their association with us, they are able to get part of their business or even themselves life insured. So we have a way, some of us, we have partner institutions that we do that one with. It's also part of our services. We also do leasing, that like you have mentioned, where people can have access to use assets for their business or for their private use, and either pay for it over time or return the asset, pay for the use of it. So that is also part of our service. Now, one critical area is the advisory service. Because the large corporations, they can pay for training, they can engage consultants, they can engage staff who are well equipped, who have the technical know-how to do analysis, financial analysis, and all sorts. Now, the people we are serving, they don't have that capacity. So we are their consultants. We are the ones that will say, okay, madam, this thing you want to do, why don't you take it in bits like this? We are the one that will say, okay, madam, how does coronavirus, how does it affect your business before we give you money? And that is a very, very critical service. And to a few of them that have listened to what we say over time, When you look back, the difference is always clear. So that is a very critical part of our business. Of course, we do training. We also do fund transfer, like you have mentioned. And a lot of us also participate in things like mobile money now and the agency banking and so on and so forth. So we have a whole lot of product. Like in my own bank now, last year we launched what we call the auto finance, where when people want to buy car, they can buy and they pay over time. And you won't believe it, when the coronavirus came, a lot of people, they don't want to enter public buses. So if you have a means of paying back, you come and take car from us, and then you pay over time. And because of that, we even won an award for that particular product.
Wow, that's
so
good.
We put a lot of innovation.
Indeed. Now, in 1 minute, just tell us, what are the prospects of MFBs as we move in 2021? How do you see? What do you see?
Thank you very much. I can tell you that when there is a recession, unlike other businesses that they don't have the market again, the market for the microfinance increases.
True.
Because the number of people that need your service now increase. Now, the only thing is that your selection mechanism, you must tighten it up. Because in the large crowd, you now have people who are still battling with adjusting to the new. As is huge. And if you have funds to serve the market, you can do a lot of things. And I believe that with what a few of us have done in the next 1, 2, 3 years, we're going to be talking of entirely different subsector, because people are actually, a lot of us who have used technology to be able to reach people even in the remote places. If you factor that in, you know that the future is very, very bright for us. Thank you.
All right, there, Mr. Adegoke Adegbami. We will also be here so that you partner with TVC and we can also do things with Main Street Microfinance Bank. Chief Executive Officer of Main Street Microfinance Bank. Thank you very much for sharing your expertise on this very important topic. I appreciate your time.
Thank you.
Hope to have you again soon.
Thank you.
All right, then.